Well, Simon, of course, we had that strong gain yesterday, and not just in our market, but markets across the globe. A little bit of a pullback today, and of course, we had those traders saying that the issue is not resolved; it's just postponed for the moment. Do you think that the rally was overdone yesterday? We got a bit too optimistic.
Really, I mean, where we're trading sort of now midday on Tuesday, kind of taking us back to our close on Thursday, which means you've taken Friday and Monday, basically removed them from the equation. And I don't think that's a terribly bad idea. A lot of what happened on Friday really was post to something that went strange in New York on Thursday evening when we were closed. Myriad of different stories as to exactly was it a flash trading, was it a this or a that, but that's kind of been taken out of the system. I think that's a good idea. As to whether this bailout package, call it what you will, for the EU area, is it postponing it? Ultimately, yes. What it's doing is it's giving us two things. It's giving the area, the European Union, time to get their act together to try and fix the problem. Much as what happened in the US, where Ben Bernanke and President Obama threw money at the problem, almost $1 trillion. It gave them space. They've got the same thing now in Europe, and that gives them a lot of time. A year or two or three, absolutely it does, and I think that's critically important. To me, the other important point there is a level of decisiveness which says, hang on, we're actually going to stand up and do something. There was a lot of dithering over Greece, and finally they kind of stood up and said, we're going to put a lot of money behind this, we're really going to work on the problem, and I think that was critical too.
Well, as you said, with the little bit of a pullback we saw this morning, we were back at Thursday afternoon's levels. But come Friday, when we were below 27,000, we were down 10% from the highs of last month that we saw on the local markets, 29,500 on the JSE's all-share index. Do you think that's the extent of the pullback? Do you think we could see more volatility and a further pullback in the days and weeks ahead?
Short answer, yes. I think we could. I mean, my looking for target was somewhere in the bottom half of 26,000. So 26 to 26,500 was really the sort of target I was looking for on this pullback, which would have been around the 13–14%. So I think we could still see some downside. I think having taken Friday and Monday out of the equation kind of gives us, now we're back on that sort of bit of pullback. And the logic behind it really is, and you mentioned it and alluded to it in the intro, is the worries around growth, certainly in Western Europe, North America. I think those worries have been around, they've come to the fore a bit, eyes turning towards the east, but I think we can still see a bit more downside. And then I'm not saying we're then going to have a tearing bull run, but I think the bulls can get sort of back in the saddle and edge us a bit higher.
Yeah, of course, the worries in China about growth are coming from the opposite end of the spectrum, Simon, and 12% growth they're showing at the moment. So we had some data out this morning, though. Chinese inflation starting to edge higher. We've got CPI 2.8%, PPI even more buoyant. Industrial production not quite as strong last month as it was the previous month. Do you think we're starting to see the signs from China that this is a country that's going to be raising interest rates and tightening monetary policy even further?
Short answer, I think absolutely. And they've got space to. I mean, inflation is the worry. Ben Bernanke in January 2008 was when he started really cutting the interest rates in terms of trying to save the economy. He said, the 20 evils inflation, we'll worry about down the line. We haven't seen it in America. We have seen glimmerings in the UK and to a lesser degree in Europe. We're certainly seeing it in China. The trick is to fight inflation. You push interest rates up, China can do that. They've absolutely got the issues. They haven't got the problems that the rest of the world has, particularly Western Europe and North America. So I think if there's interest rates moving higher, we've seen Australia already move interest rates up a little bit. I think Chinese are certainly going to be next on that list.
Simon, some news out locally today. News out just a short while ago. Discovery, that's the medical aid and insurance group, buying Standard Life Healthcare in the UK, paying 1.56 billion rand and really bolstering its offering in the UK. What do you make of that deal?
In a sense, I like it. I mean, Discovery, fairly entrepreneurial. They went to America, it didn't work, it cost them a fortune, but at least they cut their losses and they got out quickly. R1 billion, and not overly quick, but could be worse. They really need to boost in the UK. There's two ways you can do a business. You can grow it from the ground up, which is what they were doing. That's very difficult, very hard, particularly in mature markets, healthcare, the UK being mature on both levels. To go and buy a business certainly gives you that immediate spurt and that boost, and that's what they've looked to do in China. I think it's a good idea. Whether it will work, time will tell, but certainly I think, organic is nice, but I think acquisition is invariably, in many cases, the right acquisition, a much better deal.
course, as you mentioned, Destiny Health in the United States wasn't much of a success. How is Prue Health shaping up for Discovery in the United Kingdom, despite the fact that they're trying to fast-track the growth in that market?
It's really been very, very small. The business has still been almost predominantly, exclusively South Africa. The massive growth has come through South Africa. They've started to get some traction in the UK. The last set of numbers from earlier this year, I suppose, are out about 2 months ago or so. Astoundingly brilliant numbers, but really driven by South Africa. The UK operation was really just a very, very small startup, and in the big picture of Discovery, not a heck of a lot. And I think that's why they want to try and bulk it up quickly to try and get that UK operation, give it some critical mass and give it some significance in the bigger Discovery group.
Well, Simon, we had 2 sets of results out this morning that sort of indicate where the South African economy is at this space and time, or where it's come from at this space and time. We had results from PPC, revenue up 5%, profits up 10%. The dividend held steady, though, because the company does appear quite cautious in the outlook. We also had Famous Brands, revenue up 8%, profits up 29%, dividend for the full year up 50%. What do you make of those numbers?
Yeah, look, PPC, actual sales actually are not doing so good for them at all. Construction is in late cycle. We're seeing a lot of big projects come to an end. I mean, just think the soccer stadiums to a lesser degree, the Gautrain, and they're not being replaced. I know government is talking about 800 odd billion, but those big infrastructure works are not being replaced. We've got power stations and the like, but there's a shortfall there. And I think it's going to be another year at least before PPC really starts to grow again. On the flip side, Famous Brands, really, really excellent set of results. And they're an interesting place. I mean, you look at the consumer and you say, well, who are these consumers you're eating out? It's many things. It's consumers who are time pressed, who might be a bit tough on the wallet, but they've got even more time pressures, so they're going there. Famous Brands was able to push their margins up. They're opening stores. They're improving efficiencies. Almost at any metric you look at on those Famous Brand results, they came out really good. And the stock's been doing very well, moving strong in the last couple of weeks and months ahead of those results. Even on Friday, when there was chaos everywhere, Famous Brands was one of the few green stocks out there.